Right, good afternoon, guys. It is 1:31 on Thursday, the 11th of April 2024, and we are now at year two, week one in this fire journey. It is basically an 8 year experiment to test out the theory that basically by continually investing and buying the market, that you can outperform the vast majority of other options available, with a view to being able to build a portfolio large enough to be able to retire early, and indeed not necessarily retire early, but declare yourself financially independent. Guys, 2 seconds. I just want to pop back to OBS. I've only got the one screen running. I just wanted to do that just to double check that you could hear me okay. And I see that you can, so that is good. A quick look around the screen here present. You probably noticed actually that little thing that came up there about using the legacy app, which is basically this view of the Trading 212 environment. They say they're going to phase that out at some point in the not too distant. And honestly, I'm not too sure where that leaves me. I have looked at the new app, I didn't like it, and I reverted back to the old one. I hope they're not going to impose this new thing on everybody because, well, as I say, I'm not sure where that leaves me. I don't like the new one at all, and I would seriously consider relocating my portfolio if they're going to impose that, and if I just find it too unworkable. But anyway, time will tell, and we'll see what happens and whether I feel I can manage with it or not. Just when I think about it, guys, there is still 5 days left to take advantage of the current free shares offer campaign. The link to take advantage of that should be in the description for this video. But as I always say, or at least I always intend to say, I would not want anyone to rush out and to go through the process of creating a Trading 212 account just simply with the intention to take advantage of the free shares offer, unless you would already have been going to open an account anyway. And the reason I say that is because with investing there is a degree of risk, and it all depends on how you invest and where you invest and how much you understand, I suppose, to an extent, about investing in general. Quite honestly, I don't feel that I understand enough to invest in individual companies, and that's why I don't. Generally, what I invest in are exchange traded funds, and specifically the S&P 500s, which is the top 500 companies in the Standard and Poor American stock market index. And it has been shown to provide, on average, a better than 10% return per year. Looked at over a period of 20 to 30 years, something like that. This is, it's all been studied, it's been documented, it's been talked about. The guy that actually really did look into it properly from a mathematical or a statistical point of view was a guy by the name of William Bengen. I think he's better known as Bill. And you can find the information on what he discovered and indeed made public if you go to the resources section on the website. And again, you'll find the link for the website in the About section on the YouTube channel. Right, with all that said, guys, let's have a look at in fact, before we do the notifications, let's have a look and see where we're at. So currently the current market value today is 76.62 almost. It is down 1/3% on the day. The market is currently open, and although we're down just 1/3% on the day, compared to this time last week, we're down a whole percent and a bit. Despite the fact that compared to this time a month ago, we're up roughly 2%. So nothing at all concerning in that. As you can see, if you look at the candlesticks there, they are not particularly, they're not of any great size compared to the others nearby. So this is just normal market fluctuation. There's absolutely nothing to be concerned about at all. Now, I think when I invested last week, I'm pretty sure our portfolio value went just over the 15,000. So with the pullback, the portfolio value has dropped below the 15,000 again, slightly. And as you can see, that still leaves us just shy of 19% in the green. Yeah, you can see the other figures there. Let's have a look at the notifications today. I'll sort of read through them and I'll comment on any that I recognize. Hexcel down 12%, the most in 4 years, on concerning CEO pick. So somebody somewhere has a problem with whoever they have recruited. Whether that be a well-founded concern or not, of course, it is hard to know. I mean, there are certain things that can disqualify you from becoming a director of a company. So although they say this is concerning, obviously it's not that concerning that the guy or girl cannot be does not qualify, if you like, to be a director. Right, biggest stocks before earnings: Fastenal, Constellation Brands, Lovesac, CarMax, Bitfufu, whatever that is. High volatility: Delta Airlines up 2.5% on strong outlook and record first quarter sales. So Delta is one of the biggest airlines, I believe, in the United States. I'm just trying to remember, but I can't remember off the top of my head. But I think did they not also have a plane that was downed in the 9/11 attacks? I'm not 100% sure. But anyway, certainly the most recent crisis they will have faced will have been COVID and the lockdowns that resulted in massive restrictions on travel, etc. And I think the reality is that the travel industry is really only beginning now to make back some of the gains that they had lost. So it's good to see Delta up 2.5%. And moving on, then we have Tesco gains 4% as sales and profit excel amid easing food inflation. So basically, as prices have perhaps crawled back slightly due to food inflation having come down a bit, then Tesco is seeing their take increase. High volatility again. Barry Callebaut, I think that is, gains 8% as half-year results show strong revenue growth. Next hot update, biggest stocks before earnings again. Delta, Applied Digital, I'm not sure how you pronounce that, I'm going to say Air Test Systems, WD-40, surely that must be the lubricant that everybody knows and loves. Smart Global, don't recognize most of those names, to be honest. mRNA, Moderna, the vaccine manufacturer, maybe they do other things as well, I don't know, but they are up 6% on promising head and neck cancer vaccine data. I'm going to say nothing about that because I want to protect the channel, and I think in the past I may have suffered from a degree of shadow banning, even if I wasn't necessarily removed. Let's just say I personally am no fan of Big Pharma. High volatility, Tilray down 20% on wider quarterly loss and underwhelming revenue. Not sure what that company is or what they do. Rheinmetall drops 7% on sustainability concerns after massive defense stock rally. Okay, I don't know for sure, but very vaguely from history classes, the Rhine was, I think, a very important river in Germany. So my suspicion is that Rheinmetall might be a steel producer. And when they talk about sustainability concerns, I presume, rightly or wrongly, that they are talking about the sustainability development goals that the World Economic Forum like to talk about so much. And of course, to produce good quality steel, you do need very high temperatures, and typically those are provided by burning fossil fuels. So I don't know whether Rheinmetall has actually suffered as a result of all this talk about not burning fossil fuels, or what's happened there, but it's a possibility. Again, I don't want to say too much because I want to protect the channel, but let's just say that the green environmental movement is often not maybe as transparent as what it might be as regards the truth about how sustainable some of these other renewable energy sources actually really are. As one example, when you've got no wind, you're not going to generate anything from a wind turbine. As a second example, when you've got overcast skies, photovoltaic cells are not going to produce a big lot of electricity. So those are just two examples of where some of the renewable energy that we are expected to move towards is maybe not just as useful as what we might be led to believe. But guys, anyway, with that said and moving on, have things, in fact, look at this, things have turned around in the length of time that I have been speaking. Let me just check the time actually, because that's such a turnaround that I think okay, so it's 1:45. The US market, I don't believe, is even open yet, but it's as though there has been some kind of, whether it's been pre-trading or what, I'm not too sure. but it looks as though the outlook now, the expectation now at least, for the US market appears more favorable than it did 10 minutes ago, because when I started, we were sitting at a drop for the day of 1/3%. We're now sitting at an increase for the day of roughly 1/8%. So that suggests to me that I don't know whether it's due to a fluctuation in exchange rate or something else, but anyway, things appear to have flipped around noticeably in the last period of time, and as you can see, that has put our portfolio value back up over the 15,000 again. Back to closer where it to where it was before. In a way, that's a good thing. In another way, I'm not going to be able to dollar cost average just so much. But not to worry. Let's go ahead and buy our weekly £120 worth of the S&P 500. Just waiting for it to load. Here we go. So we've got the current price displayed there. We're putting in £120. That's going to buy us just over 1.5 shares at the current market value. So that's the Vanguard version of the S&P 500. There will be other providers that offer a similar exchange traded fund depending on which platform you choose to trade on. I'm going to put that through, and we have got the execution notice there. So we got 1.538608 shares. One of the things I do like about trading 212 is the ability to buy fractional shares, so you don't always have to buy a full share, and if you did, you would have had to spend nearly £80 there to buy a full share at the current market value. So I do appreciate the ability to buy fractional shares. I think it's useful, particularly for retail investors, to be able to do that. Now I'm not sure why we didn't get a notification over here for the trade, but it is there. The trade has gone through. The figures on the right hand side have updated here, and as you can see, that gives us a portfolio value now of 15,160 odd. Guys, that is going to be it pretty much for today. If you do enjoy watching the content, please consider subscribing to the channel, particularly if you're interested in following the journey, and if you particularly enjoyed today's broadcast, why not give it a thumbs up. Thank you for watching, guys, and I'll be back again next week, and in the meantime, have a great end to your Thursday. Bye for now.